All right, team. Very good morning. I hope you're all doing well. 8:30 local here in Milan, so it's 7:30 bright and early for you guys in the UK. Waking up this morning, happy to see that there are no tremendously large gaps, despite what my inclination would have been. Nevertheless, so that's promoting much of the same of what we've discussed yesterday in terms of quite good-looking price action and structure. So let's get straight into it. The DXY, as you will remember, just less than 12 hours ago, I think we spoke about the fact that this order block on the right-hand side on the weekly time frame has now been broken and closed above nicely by way of weekly candle above the area. So it's the exact same thought process on all time frames. Once an order block has been mitigated and a candle has closed above or below in the opposing direction that you'd be looking to take a position in, you simply get rid of it and understand now what price action is doing. We've now made a higher high on that weekly time frame. So of course, after a higher high, what are we expecting? We're expecting potentially a higher low for that higher high continuation. So that really is going to be the guiding light for me personally going through this week, recognizing that a higher high has now been created. Can I see DXY weakness come out of the market at some point, which will just, in my opinion, now create that higher low opportunity for then the DXY strength to step in by way of long positions from that weekly order block just here that has been mitigated. Nevertheless, on the lower time frames, there's still very much so areas available by way of order blocks to take price back up towards those highs from those refined areas and would be supported long by the daily and weekly 50 EMA. That's all good news. We can see the performance of that EMA, hence why we had that conflict in the market last week. If I put this order block incorrect color, but it's just for illustrative purposes, if you see that weekly order block here and you see that price was trading into or rather out of that order block and price was rejecting that weekly order block to the downside. So despite us having the belief or the thought process that we had a higher high, higher low, higher high that's potentially been created, that higher high actually only then took us into what I'm seeing, what we saw was that weekly order block. From that weekly order block, then we were looking at short positions from that area. So now we've had that close above that area like we discussed yesterday. Therefore, I'm expecting high low, high high continuation. That higher low will, of course, be DXY weakness coming out of the market, and we look to see if we can capitalize on, let's say, AU, GU, and EU long positions based on that weakness in the interim. However, with the mindset that longer term we are now looking for a longer position on the DXY. Of course, that's the technicals, the fundamentals will speak for themselves. We went over potential news that could come out of the market today, if I remember clearly, not too much by way of high impact news, but there's certainly some medium impact news in the market. And we've got the Fed Wallace speech this afternoon, which most Fed talks does seemingly move the markets. We just have to see what's going to go on with that. Nevertheless, I'll keep you guys updated as and when it plays out. And then, of course, refining those weekly order blocks down in terms of the daily order blocks, then we can absolutely see why, based on the daily time frame, we'll be looking at now a higher high has been created, higher low for that higher high continuation. So we're having that synchronization across the weekly and the daily. And then if you go to the 4 hour time frame as well, you still have that price action being in sync as a result of that large move without any real pullback on the DXY. Hence why I wasn't able to capitalize, let's say, on the cross pairs last week, because as you can see, if the DXY doesn't trend in a basic formation, i.e. higher high and higher low, then of course it's going to be very difficult to get involved in a cross pair position as the DXY is a catalyst of those cross pairs anyway. So it makes good sense why I wasn't really able to capitalize on US dollar cross pairs. Hence why I only took, I think, GCAD twice. I think I managed to grab UCAD 2 weeks ago as well. So it's been quite a patiently slow couple of weeks and months. But nevertheless, just taking those high probable positions from good points of interest or great points of interest is certainly the best way forward. So then if we go to the 4 hour time frame, this order block here it is in the middle of nowhere. However, it's there for a reason. So if we put the crosshair here, we can see that is indeed around about the imbalance of last week's daily cat, or where are we? The imbalance of the weekly candle, excuse me. So if you look at this crosshair on the 4 hour, head to the top right hand chart, you can see what we had that broke the structure towards the upside, that bullish engulfing candle. And the wick previous is sat perfectly on my crosshair, which is the imbalance of the opposite direction. So technically, what I am able to do is, in fact, put a new weekly order block there. If I put that order block in, I will remove it so it doesn't clutter the chart, but just so you can have a look and understand what I mean. If we put that on all intervals, we can see exactly why that 4 hour order block is has some standpoint. Nevertheless, I'm going to get rid of it. You understand why it's there at this stage, and then we're going to look to see how price reacts when it gets there in terms of DXY strength coming out of the market. I do foresee that there could be a reaction there based on that 4 hour 50 EMA. However, I still do believe that the best opportunity to forecast a long position at the market is going to be from those lows. Nevertheless, this is much like we discussed yesterday. Price hasn't moved tremendous amounts at all. And then based on the 15-minute time frame and using structure in its most basic format to understand whether or not we can get a turnaround or whether or not we can get a break of structure towards the downside pullback and then potential DXY weakness from those highs. And if we don't get that break of structure, I'm going to remain bullish from here. Even if we get that break of structure towards these depths, then of course, up at these highs, I'm going to be a little bit more hesitant to expect weakness from those areas because once price gets back down to these lower opportunities, then I'm going to be expecting a higher high to be created from those lows. So I am looking for breaks of structure to take price towards the downside. However, depending on where that break of structure occurs and what it pushes into, then up at those highs, I will be having to sit out of a short confidence from these areas up at the high. So that's the DXY. I'll run through these nice and quick. We'll start in order as always. So GU, again, pretty much unchanged. I'm using that daily time frame bottom right hand chart and daily order block to really gauge my bias to take price towards the upside. And the question is, well, why we have a daily order block that broke immediate structure points to the left hand side? As I always say, one line will do it. So there is the line. Price was respecting that area in terms of bearish structure, failing to break above. We've had that break above. We roll back through price action to see where that occurred. Here is that daily order block that now price is in that area. So I am expecting a reaction from that area of some sort. Does it necessarily mean that I need to be in that long position at the moment? Absolutely not. I don't have any signs that I should be taking a long position based on the overwhelming directional bias that's clearly short at the moment. So I need to wait for a break of structure before I look to take a long position back up to those highs. And if I'm not able to get that long position, then of course taking the short position will be my desired position anyway, as a result of expecting DXY strength to come out of the market. That should help to melt GU towards the downside. So that's what I've got at the moment on the 15-minute time frame. So there is, of course, an opportunity to take this aggressively based on the fact, would I class it as an Asia range? Again, it will be an aggressive position. For an Asia range, we can see that Asia is available here towards those highs. So let's get this illustrated so you guys can see it by the time I record it and send it out. So we have Asia range to the highs. We're looking to fill Asia in the immediacy. Now, what I have to understand is, has there been a break of structure on a 15-minute time frame? It is very aggressive. Based upon basic price action and structure, it had a low coming from here, lower high for a lower low continuation. So to take the most textbook of Asia range position, I would like to see that area I would like to have seen this 15-minute order block actually break this structure point towards the left, then price roll back down for me to take the Asia fill. We don't have that, therefore it's going to be an aggressive position, if not an aggressive, excuse me, if not an incorrect position on using that as an Asia range. So Asia range is void. However, we have had one break of structure. So it's not a position that I'm going to be looking to take because I want to see a little bit more confluence out of the market before I take any long positions. But as you can see, if I am incorrect that this is the structure point, and let's say the structure point is here, then of course we've broken that structure point with price action above it at the moment, and then looking for price to roll back for that position. But as I said, I don't think that's clear at the moment. At the moment, I feel that we're still very much so sell bias, and all time frames are marrying up for this short opportunity. Therefore, if you're going to be taking a long, I believe, based on the technicals, you should be waiting for structure breaks that are clear before taking an opposing directional trade, despite being in a point of interest where we foresee price to move to the highs. In terms of looking to take a short position sooner rather than later, I don't have an order block that's available. I'm trying to put my crosshair there. And what we can see is, can we class that session highs? So we've had one that's last week, two New York. So technically, you could call that a session high, and then it's up to us to then understand is price making lower lows from that session high. So we've made a low here. However, the reason why I will not be taking a short because we're in that daily order block where prices go long. If I can take, for me to take a short, I need to see this daily candle actually close below that daily order block for me to actually highlight it, get rid of it, and understand now that we've now made a low in the market, look for that lower high, lower low continuation. So until we have that, I still must remain long bias out of that daily order block despite what's going on. So for me to take a short, I need price to roll slightly higher in order for me to take a nice directional short position. And in terms of longs, I need to wait for a break of structure towards the upside, pull back, look for that long opportunity. So that's GU, and probably that's going to match up quite nicely with EU. But the difference is EU, we don't have a higher time frame order block to the downside that will allow us to take long positions from. So my short positions, I can be, in my opinion, a little bit more aggressive because I'm not in a higher time frame order block like we are in GU. So despite GU, all opportunities inciting shorts at the moment, I can't really short it from the opportunity where it's at because we're in that higher time frame daily order block. However, with EU, it's a little bit different because we're not in any higher time frame order block that will take price towards the upside. In fact, we're very much across all time frames, short, 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 and we don't have as I mentioned, higher time frame daily order block. So I'm more inclined to take a short position on EU. And as I mentioned yesterday, EU is clearly the weaker of in comparison to the pound and the euro because we have not respected any order blocks towards the left-hand side on a higher time frame, such as this area here. All of last week looking for potential rejection from that area. And what do we see? We see price break down below it. Therefore, what I've just described on GU, we've had the low in the market, wait for price to pull back up for the lower high, lower low continuation. And in doing so, we get rid of that order block that's no longer there and understand we can just take sell, sell, sell until our sell structure is broken towards the upside. So with that said, a couple of areas in the market. Based on the 15-minute time frame only, what we have is a lower low creating the market, lower high looking for that lower low continuation. I like the fact, what do we have? That Asia is available from last week, I believe. Yeah. So in terms of an Asia range position, that would have been nice to have taken, let's say, on Friday, as price came back up, looking for Asia to fill to the downside. Unfortunately, that 15-minute order block's been mitigated. So I'm going to need for one to be created in order for me to take that short position, unless there is one still available, which there is. Nice work. So brand new order block just there, which I'll wait for price to roll into. That's a previous order block that's now been mitigated. You can see we've had a reaction from it. Unfortunately, have we broken any structure points on the way? Yes, I'll say we have done. So I think EU is looking quite nice for a pullback into that area and look for Asia to fill, if not right in the directional position anyway. So that's 15-minute only with no higher time frame directional bias. Not the end of the world. It makes good sense based on that 15-minute time frame. But if we start to look at the 4 hour time frame, we have that kind of intermediate 4 hour order block that we had on the daily, excuse me, that we had on GU as well. Why does that 4 hour order block make sense? Let me see if I can just come to a good conclusion. Where's my crosshair? So what we could argue is this is the imbalance area of that weekly time frame based on that weekly order block. If I impose this weekly order block on all intervals, you'll see where it aligns right there. So therefore, we are in the lows of that order block. I'd much prefer price to gravitate higher into that area before looking for the short position, but nevertheless, it makes sense. We're in that area, therefore we're using our higher time frame directional bias to guide us to look for positions. And then, of course, based on structure, in my opinion, the low was created from these highs. So this becomes a little bit more of a risky short position, but nevertheless, by way of bearish engulfing candle on the 4 hour to the downside, leaving a 4 hour order block there available. I think it makes good sense specifically because there is a 4 hour order, excuse me, a 4 hour 50 EMA also just above price action. So what we're understanding is as price gravitates up on the lower time frames, we'll be pushing into that 4 hour 50 EMA by the time price gets there. Hopefully it doesn't happen instantaneous by one candle. But what I'd like to see is that 4 hour 50 EMA comes slightly lower, which would then mean we'll be breaching that 4 hour 50 EMA, expecting the rejection from it. And I'll be looking for a 4 hour candle at some point. It would print bullish like so, drawn to exaggeration, and then it's going to reject the 4 hour 50 EMA, leave us with a wick to the high. If we get in the first instance, great. If not, then you'll be waiting for the next 4 hour candle to close, or rather to open, then push up back up into the imbalance left at the highs, and then you'll be looking for that short position. So that's pretty much what we'll be looking for if that is to play out towards a textbook looking position. So that's EU. I don't mind this short position here. It's around the structure point. Does it make sense to short from there in terms of stop loss placement? It's a little bit larger than I'd like. However, I'll be looking to take price down to fill Asia. Nice 1 to 3 to start the day. I think that's quite nice indeed. And what you could also look to do is simply trust your analysis because this 15-minute order block is mitigated. Therefore, once you get that lower time frame break of structure from that area, you can at least cover your lower time frame order block as well as covering the 15-minute order block that you're using. I think that makes all the sense for quite a decent looking trade. So I'll be looking to take something similar like so if price gives me the ability to do so. So this Asia is about to be, oh no, London's not even open yet. So this Asia is just going to continue to print larger, we hope, and then give us all the reason to actually take an Asia range position within another Asia range position. So I quite like EU actually. I'll make that a favorite towards the highs for a good looking short. So that's EU, GJ now. So GJ was looking at this morning, getting itchy fingers. I think it's a nice looking position. Again, we have that intermediate 4 hour order block across the pairs. As I mentioned, it's pretty much all in sync today. GJ, in terms of weekly time frame, no bias guiding the short. In terms of daily time frame, no bias guiding the short either. But what we do have is the fact we have, as I say, one line would do it. Break of structure to the downside, pull back up into a point of interest looking for the short. Now, we do have a daily order block right up at the highs, but that daily order block here on the daily time frame correlates to this position up at the highs. If price gets there, then of course I'd be looking for a short position by way of the higher time frame directional bias. If it doesn't, as where price is at the moment, I don't mind it. We have this data 4 hour order block that's available, hasn't been mitigated, supporting short by the daily and 4 hour 50 EMA. So it looks good for shorts in terms of the confluence that you have in terms of journaling that position. You can't go too far wrong when you start to stack that level of confluence. We had range bound market broken out of the range, looking for that low that's now created. In fact, we had the first sign here. So we had the low in the market, was waiting for price to pull back into the air. I'm pretty sure I took a position like so at some point into this area, expecting at that stage the lower low. Wasn't to be. Price hung around up at those highs and simply fulfilled the range highs and manipulation, and price came back out to the short. And then we've had another low again created. So lower low, lower high, lower low create, expecting a lower high in this region or in this region or any other region where price wants to develop. But based on the technicals, it's giving me two clear areas in the market, and we are around one of the areas where I'll be looking for a short position down. And when I look at structure, the most basic format on the 15-minute time frame, does it make sense? Well, at some point we made a low in the market, price came back up, lower high for that lower low continuation. So of course, as price wants to come back up to that area, refine 4 and 15, key structure point where price made the most recent low, absolutely, I'm expecting a short position to come out of that area. At the moment, price hasn't done a lot. If we look at this bigger picture, we can see clear highs in the market, clear lows in the market, and potentially entering a bit of a range-bound market like we've had previously here on GJ. If I superimpose that on the 4 hour time frame, you can see exactly what's going on in these most recent candles. They're not really doing too much. Therefore, I am happy to actually take a short position based on my directional bias, but also based on the fact that I'm shorting from the highs of a range. That's where I want to be at all points in time anyway if I'm going to be taking a range position. Therefore, I quite like GJ. Looks good for a short. I'll be waiting for a lower time frame break or structure before taking that short position. In fact, because it's a range, which I'm more leaning towards the fact that it's a range. I am going to wait for a 15-minute bearish engulfing candle from that area. Once I get that 15-minute bearish engulfing candle, it's going to leave me a 15-minute order block left behind. As the imbalance is filled, I'll then take the short. What that will guarantee is exactly, you have to take my word for it. Once you get that 15-minute bearish engulfing candle, price action to the left, that was printing up. The engulfing candle will break structure points on the 1 minute time frame. It's going to leave you a 15-minute order block as well as leaving you a lower time frame order block. And then you have the opportunity to take it from the 15, which is going to be, of course, slightly larger. You can also take it from the 5 minute, which will be within the 15-minute order block. Or if you're so pleased to wait for a better entry before looking, where am I? If you want to look for a better entry, which will give you a tighter stop loss, and of course, even refine within the 15 and right up at the highs, what you will see is a lovely 1 minute order block right there up at the highs, and then you'll be having a very, very, very small stop loss up at the highs. So that's the entry criteria: 15-minute bearish engulfing candle, and what that will do is just break all structure points on the lower time frames anyway before taking that short position. So that's GJ, like GJ in terms of shorts. In terms of longs, I won't be interested in logging from the lows of this range because I believe that we are short bias at the moment. So shorts are definitely my favorite. In terms of taking a long, then I need price to gravitate towards that 4 hour order block down here at the lows before looking for much of the same, a turnaround in price action. So that's just shorts disclosed, and up at the highs. Absolutely, I think this is a nice looking short as well. Two clear areas in my opinion. It would be a shame to miss one, well, not a shame to miss one, but what I'm trying to get out is with good risk management, it's okay to lose one, particularly this one. So I think this trade makes good sense to take short. That's GJ. UJ, right, UJ. I hear everyone running into UJ shorts already. It's not ready, in my opinion. We've got no indication that the DXY is looking to slow down just yet. We head over to the DXY. The DXY hasn't broken structure points to the downside to give us the incentive to take a short. Therefore, if I'm going to use the cross-pair correlation, which is the catalyst by where the DXY guiding the primary US dollar, I have no right to be shorting just yet. And we have that information based on all intervals on all time frames. We're very much so bullish, despite being in that weekly order block, refine daily, refine four. I get it. It looks beautiful. It looks textbook, but that's just the overall direction of the technicals. The setup isn't confirmed at all. There's nothing there just yet. We have structure points towards the upside that price is failing to break below at the moment. So what I'm inclined to actually look for, although I can't, based on the fact that where we are based in the higher time frame analysis, I am only short bias, like on the DXY last week, until I get a weekly candle actually close above that weekly order block. I can't take long positions. I have to only look for shorts if they present themselves. So therefore, recognizing that I have an entire week where I can only look for shorts, then I'm not going to be taking a premature short, getting stopped out, and then getting my strategy to develop and then miss the short because I'm pissed off that I've already wasted money taking shorts that aren't ready, right? So structure points to the downside, very clear for me to see based on opticals only. And if we look to structure, we've had a high created from here, therefore here towards the left-hand side becomes a key structure point in the market, if not slightly lower, because I understand I can be wrong, and I don't know whether price is respecting this area that's made a high in terms of higher low, higher high, higher low, higher high continuation, or is price action going to be respecting what looks good as well? So there's two areas in the market. At least I want to see this area broken for an aggressive position. So to highlight it, that's aggressive, that's aggressive, that's an aggressive short. The better opportunity would be wait for this structure point to be broken, pull back point of interest short. That's good. And then, of course, great, pull back short, and then look for the long. Now, the reason why it makes sense to be patient here is because look at the range that we have on UJ for that short position. If we manage to get into a short position on UJ, look at the reward that's potentially pending, 481 pips. So therefore, does it not just make sense to wait for price action to actually develop and take the profits when they arise? For me, that's where I'm going to be going anyway. So I'm waiting for breaks of structure, pullback in point of interest, sure. And until that happens, there's nothing else for me to do on UJ. It's quite a very simple week for me, based on UJ. Now, can we understand why the DXY could potentially turn around to give us that US dollar weakness coming out of the market? Yes, we can, because we understand that what goes up on the DXY may well indeed come down. We've made that high. We understand we're looking for the higher low. That higher low will be us taking profits potentially, or actually getting into the position, or worst case scenario, price action just breaking structures towards a low. So opportunity to miss the position, but overwhelming bias is short. And I believe even if you miss the first, price still develops, will give you an opportunity, lower low, price will come back for the lower high, lower low, lower high. There is always going to be another opportunity. So be patient, be disciplined, and take that position only when it's valid. So that's what I've got for UJ. AU rolling through the pairs. What do we have at AU? As I mentioned yesterday, trying to short AU for feels like weeks, but just not getting any clear pullbacks. So I'm getting quite tempted to take a reversal position only if criterias are met. So weekly order block, we're looking for price too, with of course bearish engulfing candle, lower low, lower high, lower low continuation down into the daily order block, supported up or towards the upside by that weekly 50 MA. It makes good sense where we could be looking for short. We've got lots of range to take that short position as well. So again, no rush, hence why I haven't taken any positions on AU, because price action hasn't been pulling back based on what we've seen on the DXY. So my best opportunity for the short is definitely going to come up at those highs. Once price gets there, I'm going to be very aggressive, lower time frame break of structure, immediate short positions down, and looking to ride price towards the downside. In terms of the here and now, whether or not I see it valid to take a reversal position, I don't, to be honest. It's not ready yet. What I mean by that is structure points on the 4 hour time frame to be broken towards the downside. If you use your eyes and understand what's going on here, do I have any clear directional bias on the 4 hour time frame? No, I don't. Price is making clear highs, clear lows, but we're not trending. Therefore, for me to take a reversal position, I could either be very aggressive or very patient. Very aggressive would be structure point in the market, wait for that to be broken by way of 4 hour candle towards the upside, bullish, and then what we have is everything we've always mentioned: higher high, higher low, take the position higher high. So that's going to be an aggressive type of reversal position. And that's all that needs to be said, to be honest, in terms of taking it towards the upside. Now, the reason why I'm tempted to take the position is because for me to take a short, I need price to actually gravitate up towards this area or this area anyway. So my forecast that price is going to move towards the upside, then of course I don't always want to be in both directions, but I can understand why we could turn around on AU based on that 4 hour time frame. So no reason to take a long, but for if I've read price action correctly, and we either have a point of interest here based on price towards the downside, or a point of interest here where we have an order block. If I had an order block just here and I was looking to take a short position from that area based on the 4 hour time frame, what have we now had? We've had a break of structure towards the upside. So my first initial thought process could be, okay, in the journal, I've had an intricate break of structure on the 4 hour time frame. After that break of structures happened, we've returned back to the order block that caused that break of structure. We're hanging around the area. So at the moment, no reason to take a long position. However, as soon as I get a sign on that 4 hour time frame by way of this 4 hour candle closing bullish and price rolls back down, then I think that looks a lot more attractive. At the moment, I can't take a long position just yet. There's no reason to do so. We haven't broken any structure points on the 15-minute time frame, in my opinion. And I think that forcing that first thing Monday morning is going to be a little bit risky. So I'll just be waiting for price to develop. A couple of areas how I can look to do this. I can wait for an Asia break of structure, i.e., could I take that as an Asia range? Potentially. But what I would wait for is at least this area to be broken. If I can't be patient, broke come back, point of interest, look for the long position. I think that'll be better, even better than a break of Asia towards the highs. I think this structure point to be broken, not tap into the 4 hour 50 MA, not tap into that order block that I've just recognized as well. Where are we? So here's an order block. So that's been mitigated, but our price hasn't broken above it. Just going to put this on so you guys can see it. Just there. So what I'd really, really like to see is price break and close above this 15-minute order block, then pull back. Then I'll be looking for the long position. Couple of things you can do. So break of Asia towards the highs. But to be fair, if you break Asia, you're probably going to break the structure point as well. And then look for the long position up. So at least at that stage, I'll have some confluence to take the reversal, even better, break of key structure point, pull back, look for the long. So that's very simple for me on AUD US dollar. And then where do we go next? GCAD. So GCAD, don't mind GCAD to be honest. High time frame directional buyers, nothing on the weekly time frame. Couple of wick imbalances there. You could say did the business last week. Wick balance the left. Price tried to close above that area, failed to do so, left us with another wick. And then last week we're just in and around that area of the wicks where price is failing to close fully above that area and sustain that bullish pressure. So there's nothing really to guide us in terms of short positions from the weekly time frame. Going down to the daily time frame, we are trading out of this daily order block. Hold your eyes while I zoom out. Daily order block just here. Price came in, made a low from that area. Let me see if I can update that order block. No, there's nothing there. So we're going to still use this order block that caused price to hold above. We've had a low created from that area, so it would have been better to see price reject this area that created the low. Unfortunately, or however you want to call it, price has come back into that area, looking for the short back down from the area. So with that then said, onto the 4 hour time frame, need to understand where we are and what's going on basic price action and principles. At the moment, what I would say is we are higher high, higher low, higher high created, higher low in the market, expecting a higher high. Failed to do so as a result of, see, this is where I start getting, we could call it excited. When you see a failed higher high in the market, and then what's happened, you've had an intricate break of structure on a 4 hour time frame. You've had an order block left behind where price then come into and rejected. I am now expecting much of that and take price back down. However, what we have to be mindful of is we have a clear trading range to the left-hand side. If we say that the high was created from this area, then of course on the 4 hour time frame we are still bullish unless we break this structure point, which doesn't necessarily mean I can't take shorts, but what it means I have to be mindful of managing my position by the time price gets down to that area. With that said as well, 4 hour 50 MA is supporting price towards the upside. So what would be a lot better if you had a, oh, where's my screen gone? Where's my screen gone? Whoops. What would be a lot better is if we got a bullet, excuse me, a bearish 4 hour candle close below that area. That way we'd be alongside the 4 hour 50 MA pullback, look for a nice hard time frame short where it would be into this area. And when we start to put that on all intervals, 15-minute time frame, you see that we do have the range. And above this 4 hour order block is a nice 15-minute order block. So it's not that I'm not going to trust my 4 hour, but what happens is, as I always look to illustrate for you guys, 4 hour order block is valid only on what time frame? Is valid on the 4 hour time frame. So even if the 15-minute time frame starts to print above this 4 hour order block, we still have 4 trading hours for price to reject that 4 hour order block. Of course, a 15-minute time frame, we have only 15 minutes for price to reject it and hope that we don't close above it. Therefore, this is the 4 hour candle that I'm going to seek to expect. As price comes into the 15, I'm going to expect a rejection of the four by the time the 4 hour candle closes. And actually, that's good confluence to take the short from that area. And then hoping that the previous 4 hour candle actually closes below that 4 hour 50 EMA as well. What I'm going to have is quadruple confluence that now this next 4 hour candle is going to want to reject that 4 hour 50 EMA to the downside and leave us with another wick to the high. So it's looking good, GCAD shorts. I don't mind it at all. In fact, Yeah, I'll take it. They're good looking positions. In terms of 15-minute, nothing in and around this area, so I'm gonna have to be quite fixed and stick to this 15-minute order block up at the highs, which I think makes good sense. And then be very mindful that I have to manage my position down by those lows, as I mentioned, which is more than enough pips to take a good risk reward trade. Let's have a look. Short position GCAB max are around 20 pips. What's that? That's 34. Lower time frame break of structure, that's 23. Looking for your targets down by here. An easy 1 to 6, 6% return. Even if you stretch that, let's say to 27 pips, still 5% return. So be patient, wait for structural breaks from the area, and then I'll be looking for a short position on GCAD. In fact, GCAD gets a nice pink favorite. And then US dollar CAD's pretty much at the bottom of my pile, to be honest. And I haven't paid it too much attention at all because DXY, US dollar CAD, very much so linked. Now, if the DXY has no real area to take a short position from, then I'm getting the same kind of information on US dollar CAD. Even if I was to put some high order blocks up in here daily, already broken above that. And at this stage, I'm just looking left, left, left continuously to try and, well, what's happened there? To try and that's better to try and find a reason to short on the daily time frame. On the weekly, let me just double check myself. Yeah, we've broken above, just like on the DXY. So US dollar CAD last week looking for short positions, but look what's happened. We broke above, made that higher high. So of course, after the higher high, like I've said, expecting that higher low continuation. So I am expecting a rollback on that pair, but I don't have any way to short it down. So what I'm gonna have to do is just wait for price to return to that area for me to potentially take a position long based on what the overall directional bias is telling me, and that is longs, longs, longs. It doesn't look like the US dollar is slowing down at all. So the US have Mr. Trump to thank for that. Absolutely. So we'll see how that gets on. But as I've mentioned, the screen again, what's going on with that? Okay, it's back. As I've mentioned, there are good opportunities in the market. So to take a US dollar CAD long when you have a nice looking pairs, let's say on EU, both directions, I think it makes quite good sense what you should be waiting for. As always say, team, before I go, use the DXY's full degree of confluence when taking your positions. Manage your risk accordingly and trade what makes sense. Breaks of structure, 15-minute time frame, lower time frame, breaks of structure, order blocks, and take the position when you feel confident to do so. Until next time, team, all the very best. You'll hear from me soon. I'll keep you updated in the chat. Take care. Lionel, very good morning, sir.